on a Thursday. I don't usually get to do this because Tuesday and Thursday is the days that Ken Shreve comes on. Ken comes on at 3 o'clock till 4 o'clock, former IBD, Investors Business Daily analyst and commentator, and has his own newsletter. And then, of course, we wrap up at 4 o'clock till 6 with Tom O'Brien giving you the wrap for the day and what he's expecting, what he's looking at, and he takes all your questions, as I will, on commodities at 877-927-6648. Now, of course, this is not my speciality, but I chart anything that moves because the Chapman wave is the waveform that never sleeps. Essentially, what I do is I look for the lowest, most identifiable low bar, and from that, I start to chart peaks. And each successively higher peak gets graded. It's really a very simple system. If you want to know more about my work, my opening call, that's my service here on TFNN. I do cover the S&P E-minis every single day in my opening call. I give the parameters on the 120-minute chart, but I also cover the commodities and bonds and the currencies as well, with parameters to watch, and I show charts that are very, very important to my way of looking at the Chapman wave. So let's just get started here. Right now the Dow is up 30 at 12,609. I said to subscribers today that the levels that I'm watching for today, and it's very important that we do get a move to the upside, but I also think it'll be a fairly narrow move today, maybe a doji close on the candle that was formed yesterday. I don't want to go into that right now because this is the futures hour, but I just want to say that what I'm really looking for, and what the E-mini, the S&P E-mini has done, as well as the S&P, which is the reason why we were short just for a day or two at the beginning of the week, going into, I can't even remember now, days are just flying by, but we were short. We got out at break even on the Dow, 200% short. Reason being, I saw that there was strength in the S&P, the way I define it, the way I analyze it using the Chapman wave. So my service is the opening call, and you can go to the front page of TFNN, you get 2 weeks free. You'll learn an incredible amount because every day it's a teaching experience. I give charts to study. I explain why we're looking at it. I explain within the Chapman wave methodology what's happening, why we've got a parallel wave count, etc. So let me go through what I'm looking at here. In the E-minis that you can see, if you're looking at Tiger 1 or if you're in the Dan, you will see that from the low bar of October the 4th at 1062.25, the S&P E-minis, that's the March E-minis, made a low and made 4 successively higher peaks. In my methodology, it's at that 4th peak that you start to get either a sharper decline, a longer sideways move, or there's this technique that I teach, which is either a recycle or the instant restart. So it is really important at that 4th peak to be monitoring very closely what we look at. Well, it turns out at the 4th peak on the 27th of October at 12,083.00, I always look for round numbers even in the futures, we got a peak, and the market pulled back and made a pattern that I call the dreaded H. You can see, I'm going to talk about this in a little while when we look at, I think it is, I was looking through so many different, I think it's either sugar or cotton. Anyway, we'll look at these a little later on. So you came back down, and then you made an arch formation without taking out the previous high. Now, look what happened. You broke down, and the E-minis went to the low on the 25th of November of 1141.75. Started a brand new move. It went peak A, peak B. Peak B was the high of the 8th of December at 1266.00. Pull back. Now, the big question, my work is, do you restart? Is this a restart where you start to count A, B, C, D again, or just continue? In this particular instance, because of the way the MACD and the stochastic, these are two technical tools that I use. This top one's the MACD over there, yellow and red lines. Those are volume bars over there, and that's the histogram in the middle, the gray area. But if you look at the lower one, you'll see that this is the slow stochastic. And there's a big difference between the slow stochastic and the fast stochastic. So now look, this slow stochastic pulled back under 50%, and then it started back up. So I decided that it behooves me, because the S&P, I have to just go to the cash for a moment. The S&P, the SPX cash index gave the same kind of signal, that it said to me that it probably is a continuation pattern. So I call that ESH. I call that new leg C when we broke 25 cents above the high of 12.6600 of the 8th of December. That's C. It goes within 3 days to D, and then you get something that is very important in my work. This is where I call it either an instant restart. Every criteria is met except for one, and that's the way the MACD acted. So it's, if you look at the white line as well, look at that white line, how beautiful that is. That, in fact, is the 9-period exponential moving average. Now, if you wanted to also draw, I'm going to do this. If you wanted to draw those triangles that Larry talks about in his shows, you will see that you can make an argument that there is, in fact, it's so fascinating. When you have a robust technique, I don't care what it is, other techniques merely add. They complement. They don't detract. They should not detract ever. They should only add to your work. Well, in my work, what's happened is we are getting to the end of that triangle to the upside, that particular is it a Gartley or a butterfly? It's expanded more, so it's more likely a Gartley pattern. But my technique says that if the stochastic's at 87%, above 80% is good. 85% to 90 is really good. Above 90 is fabulous. As long as it can stay above that area, that to me is very good. Besides which, I'm going to throw this in because it's part of the techniques I like to talk about. I've been talking about for months that if the volatility index, the VIX index, it's not about the dollar, it's not about the euro, it's not about gold, it's not about anything else. It's about the buying pressure of people who have missed out on a fantastic move in 2011 and 2012, considering all the bad news. That's what I'm saying. It's considering all the bad news. You see that the volatility index has just made a new recovery low. I always talk about recovery highs. Yeah, let's call it unrecovery low at 19.45. There's a downtrend line that says it could go down to the 1697, but I go one step at a time. And what I like to do is to go into the bigger picture, which is the volatility index. And if you look at the volatility index, has the same down channel, and it says a left side, right side time price match could take us to February, where there could be a test of the 17.40 level, especially since the 9-period exponential moving average this week so far has repelled the price. If you look at the monthly chart, look at the way this what I call the Eiffel Tower fader, you go straight up and straight down like a capital A, uppercase A. So this is the same thing. So that says to me that there could still be buying pressure. So now let's go to our E-minis. I could actually, at this particular point, let me also go to the NASDAQ, the mini NASDAQ 100 March 2012 contract. That is extended to leg E. And here again, I could call this E/B because the MACD is very strong and the stochastics at 95%. I do not have a single signal at this particular point other than to say we could have a 3 to 5 day pullback, but I'm not getting anything at this particular point. So I wanted to go through that to explain my methodology in the most simple terms. Now let's go to all these different contracts, and I'll go one step at a time. Let's go to the EUR-USD, the currency pair, the Forex Euro dollar currency pair, in a very strong leg A up. I'm going to start with the daily to show you there was a left side, right side price time match when it went to 1.315, the low of the 3rd of October in the daily chart, to a high of peak E at 1.424 on October the 27th. Then it came down and it retested at 1.3122 above the previous low bar, had an arch shape. Remember I was talking about that dreaded H pattern, the lowercase h? Look at the lowercase h right here where the price pulled back and retested the low and broke it. Look how it kept doing that. Look at this big one from the 1.31226 where it smashed through. I was on air when it happened on the 12th of December. And I said, be careful because we've got this Friday we could have a close below the 1.31226. That'll be very negative. Now look at the down channel that's been forming. But for the very first time last week, the euro, the EUR-USD, which of course is a currency pair, it's made up of about 55%. It's made up of about 5 or 6 different currencies. So now let's look at this. The euro is rallying. And last week, for the first time, closed above the 9-period exponential moving average. That's actually the first time since the week of the 3rd of January, which was the first time since back in, was that October? Since December the 1st. So you can see how important this white line, this little, I'm going to try to expand it so you can see. That white line there is really important, because by tomorrow, if the euro closes decisively above 1.29, preferably if it touches 1.3, has it done that today? It hasn't touched 1.3. I would say that the euro, this is a leg A, but now I have another technique in the chap wave called the single leg A up failure. So that says that you've got to be careful, because you do get these patterns where it goes straight up to leg A or B and then fails. You've seen how many times it's done that. I suspect this time is going to be different. Why? Because it's the first time that you got this fabulous divergence between the MACD, the moving average convergence divergence, and the histogram all being way above where the price came back to the most recent low of 1.26254. So I like that. I think that's very important. And the stochastic had a W formation with a rising right bottom, shoulder bottom, or whatever you call it, the right side bottom. So I like that. Now when you get to the monthly charts, we got real close to what I was talking about as a target of mine, 1.24, the 200-period moving average. So the euro at this particular point is having a retracement rally failure mode. Now, I want to go through some of the other things. Why? Because this is a very important point. I think we're within a couple of days of some kind of a short-term top. And, of course, Larry, I think, was talking about Sunday night, Monday. We'll see how that fits into my work. I'll be right back. Basil Chapman sitting in for Larry. 877-927-6648. Please give me a call.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. You've always taken the long view when it comes to investing. But what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while actually reducing your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns, making missed opportunities a thing of the past. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
In 1929, Joe Kennedy had $4 million. By 1932, he grew it into $180 million. All this during the Great Depression. The good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time has been spent in recession. How would you like the strategies that are bulletproof against the turmoil of our economy in these fast-changing times? For the last quarter of a century, I've studied and used the secrets used by millionaires and billionaires. These are bulletproof strategies that will absolutely astonish you. I'd love to introduce you to these concepts that will absolutely change your life. You'll learn the 3 ways to grow any business exponentially. I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien and host of The Trader's Edge, both seen daily at TFNN.com. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com, look under Breaking News, and click on the Get Steve Rhodes Special Report link, and I'll email you this free report, Pathways to Wealth.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com. Now, back to the Futures Hour.
Hi everyone, we're back. Basil Chapman. My service is the opening call here at TFNN. I have the Monday, Wednesday, Friday show, the Tiger Technicians Hour at noon, 11 o'clock till noon. Monday, Wednesday, Friday. Got a little confused there. And of course, I'm just sitting in for Larry Pesavento today. He's away. Now, I'm going to show, this is the 3-minute chart of the E-minis, and you can see the same process applies here using the technique of the MACD and the stochastic. And we've made a peak F in the 3-minute chart. This is very interesting because the 120 finally has gone to a leg F. That's where you've got to be most careful unless it's recycled up. And at this point, I really think it's an F. And it says that the E-minis on a very short-term basis have a lot of resistance between, I'd said this morning to subscribers 1309 would be kind of pushing it, but you can go to 1312, and then if you break out above that, that's really important. That would be a pretty good breakout. So the techniques apply. It doesn't matter what. That's why I was able to do the commodities out, because it doesn't matter what we're looking at. Let's take a moment here and let's go through all the different aspects that I want to. The dollar has made a peak F top, and if you use the techniques that I propose, that you at least attempt to just put it on your system and see if you like it. Look at the way the MACD, when the dollar hit 80.85 on the 29th of the daily chart, 29th of December, look where the MACD and the stochastic were. They were way below where they were on the 14th of December when it was at 80.37, 50 cents lower. Now, wait a minute. That's nothing. Look at where they were when the dollar in this beautiful up channel. Now, there's something about up channels that I do, a little different to what most others do. I use the up channel. I have an inside track. When it gets into that particular zone, that's where you can expect it to reverse. When it gets back into the bottom zone, if you're looking at Tiger TV, that's when you can expect it to reverse. The dollar has broken that support from a peak F top in the 6th highest peak in the Chapman wave, is where you've got to be careful. So the dollar's pulling back very sharply because there's a chance that today, and especially this week, it's going to take out that left side low. I'm saying that the pattern that I was looking at with the cup formation, left side, right side, perfect to the week exactly. The left side matched the right side at 81.31 with an inside track. You've got to be careful now if you're along the dollar, because although the technicals of the weekly are strong, it could pull back a little and test the 79 area. It's at 81.47 between 80.21 and 78.67. There's tremendous support. So I expect some kind of a pullback here, which will allow the euro to go a little higher. Now, because the calls that we have coming up are directly related to the futures hour, I'm going to take our next call, who's Ari in Arcadia. Ari, how are you?
I'm doing pretty good, Basil.
So you'd like to look at
GLD.
Okay. So, folks, the GLD trades at 1/10 the price of spot gold. Now, this is really important. I'm going to look at the GLD, and then I'm going to go to the futures, and I'm going to go to all the different gold indexes. The Spider Gold Trust, which is the GLD trading at 160.79, down 81 cents, has confirmed for me a peak F top. Remember how important the peak F top was in the weekly and the daily chart of the dollar? Now look at this. The peak F top in the monthly chart says that there's a real good chance that the ugly candle that was formed last month, is being filled a little bit with an inside bar. But by the end of January, if the GLD closes below 157, that's going to be negative. Absolutely, if it takes out the low of 140, 46.27, that is very negative. And then that up channel has support that it must hold at 145. So that's the monthly chart. And the only way it's going to change is if there's a fabulous move to the upside that takes out the arch high in the weekly of that failed B minus of 175.46 the week of the 11th of November. So this rally, which held the weekly chart, which has had a 2-year up channel, hasn't broken yet at 148.27, is in leg A, but the amount of work that the stochastic has done and the MACD is still not closing, it's only flattening out, says to me this is a counter-trend rally and that the dollar is the one that's probably going to go higher. The euro will later on come down. So that would say that our markets later on could come under pressure. When? We'll talk about that. But in the meantime, the GLD has made a peak C, and I think Ari's question is going to be, are we going to make that requisite leg D up in the GLD? Is that the question, Ari?
I got my money on leg D up.
Oh, you already have it? You have it in D?
No, I haven't, but I have my money that it will go.
Yeah, okay. All right, great. So now what we're going to do is we're going to look at the gold chart. We've got a break coming up. We'll be back with Ari and Marty straight after this. Basil Chapman sitting in for Larry Pesavento. We're looking at the golds and the gold futures as well as silver. I'll be right back straight after these messages.
Hi, folks. This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com under newsletter. Hit the Market Insight tab for your 2-week free test drive right here, right now.
Attention business owners, managers, and entrepreneurs. Studies show that 1 in 25 businesses last 10 years and less than 1% of all businesses generate $5 million in annual revenues. Would you like to learn the skills that separate these businesses from all of the rest? It isn't about working 10 times harder. It's about working 10 times smarter. And I can show you how. Absolutely free, no strings attached. I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, past owner of businesses at Disney, Universal Studios, Vegas casinos, and top destinations throughout the world. Join me Wednesday, January 25th at 6:30 p.m. for a 1-hour online webinar where I'll teach you how to get your dream clients, get past the one person that stands between you and the most influential people in the world, and show you the 3 ways to grow your business exponentially. Go to the front page at TFNN.com under Breaking News and click on Pathways to Growth, where preparation meets opportunity. That's Wednesday, January 25th. Register now for your Pathway to Growth, part of our Go Long America program on the homepage of TFNN.com. Decisions shape your destiny. Shape yours now.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit TFNN.com today.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com. Now, back to the Futures Hour.
Hi, everyone. We're back. Basil Chapman sitting in for Larry Pesavento. And Larry will be back on Monday. And we're on with Ari in Arcadia. We have Marty waiting in Mass. So I'm going to go to Ari. And I do want to talk about the gold contracts. Ari, if you look at the gold, the GCG, the February gold contract itself, the futures contract, you'll see from the 1523. I want to expand this chart so you folks can see in the on Tiger TV. Look at this beautiful left side, right side price time match with the inside wedge that came back down here. After it made, it's a rare peak G. Peak Gs can happen, is a particular technique that I use. I call it the smooth G. Happens within 3 bars, sometimes 4, but usually it's 3. It's just an extension of F. And then it stops at 1806.60, pulls back down to 1523, and on the 29th of December at 1523.90, it starts running, and it goes to peak A, peak B, peak C, and today it made leg D up. Now that's really interesting for me because why? That inside track that I've developed that has the red line, which comes in, if it's today, that red line is at 1678.50, and if it comes in on Monday, it's a little lower than that because it's a descending line at 1677. Has a breakout line as well, so that if gold was to go to 1690, it's at 1654.80 right now, that would be a first breakout of this down track. That would be important. The MACD strong, stochastic strong. So far, I don't have a signal other than at leg D. You've got to be a little bit careful, a little cautious. Let's put it that way. Now, if I look at the 120-minute chart, I've made my requisite peak D today, and it broke out of the broke down from the up channel, tried to bounce back in, and now I have to put a down arrow here because the technicals are declining. So on a very short-term basis, I think gold will be pulling back. But if you look at the SLV is what was before lagging the gold contract, and today it still hasn't, although it had a very nice move from the low of 25.65, that's the Silver Trust iShares. It went to 29.84, and today it went to 29.81. It couldn't even break that for leg C. That says to me, I've got to be careful here that silver doesn't, based on the weekly chart, pull back. So if I put the two together, and if I put together with the XAU index, which also is very interesting because of the chart formations, they're a little different, obviously, than the gold contract. The XAU says I might be making a dreaded H pattern. I couldn't even have the strength to go from peak C to peak D. I'm pulling away from the 200-period exponential moving average, which should have been a magnet. So if by Tuesday I'm saying that's giving it a half a day today, a little bit of today. Tomorrow, Monday and Tuesday, if by Tuesday the gold contract, the Philadelphia Gold and Silver Sector Index, does not break above 196.89, and right now it's at 188.66, that would say that the 200-period exponential moving average, which should be an attractor, not a detractor, but an attractor, is going to be absolutely important. Why? Because the down track has the resistance at today. Let's go to Friday. Tomorrow the resistance will be at 192.91. And it breaks out above the green line if it goes to, say, 195. 195 gets really close to the 196.89 high of the 12th, peak C, and then we can be looking at the chance of making the 200-period exponential moving average at 199.35. But the stochastics pull back to 75%. So you can see that based on my monthly chart, based on my weekly chart, and based on the daily chart of the XAU, I suspect that gold might have a little further to go, but that at some point gold is going to start pulling back again. So unless gold absolutely breaks out, that's going to be the question. Let's get quickly back to your question of, will the GLD make leg D? Based on the daily chart of the Spider Gold Trust, I would say that there's every reason to think that it could go above 161.65 by Tuesday. It will fail if, I don't know what the reason would be. If it closes below 159.45, which is the 9-period exponential moving average, watch that candle of the 13th, because if it starts to go into that candle, then that 156.01 area is going to be the target. And it gets dragged down to the 200-period moving average at 157. So this is a very critical time for me, and it depends also on where the dollar is going to stop, because the DXY looks to me like it wants to test the candles of the 4th and 3rd of January, which takes it to the 79.55, 79.50 area. So I hope that's giving you a sense of what I'm looking at. And the other thing I was going to say is, if the GLD takes out the high to start leg D, I would start taking a little bit off, because the amount of energy that the weekly charts have shown in the technicals and the pathetic little price move that it's had, going from 148.27 to 161.62, says to me it's usurped too much energy. So I hope that helps you, and I will be on my show tomorrow and we'll continue to look at it further. But I hope that helps you, Ari.
Thank you. I appreciate it.
Thank you very much. Let's go to Marty in Mass. Hi, Marty. How are you?
Fine. How are you, sir?
Very well. Thank you.
It sounds like you're expecting a bit of a correction coming in the market after a few days.
I am, and the correction that I'm looking at, because of the rotational nature of this market, which it's been in since the summer of 2009, says to me, because the home builders have had breakout moves, meaning that the last 2 days saw them move exponentially higher than where they were at just, as I say, 2-3 days ago, tells me that if they were to give back, then what they would probably give back is the 2 or 3 days of action, which is a big price move and a good percentage move on the downside. But the rotation tells me also that if I was looking at the XLF, which is the financials, then which is in leg E, based on my Chapman Wave methodology, it has a price time move going to tomorrow, the 20th, at 4 o'clock, to try to get to 14.17, which was the left side, right side price time match of 14.17 from the 27th of October to the midpoint. In this case, it is a perfect midpoint of the 7th of December. And it's a beautiful steady move above the 9-period exponential moving average. So I'm anticipating that even here in the financials, if there was a pullback, we would probably form some kind of a rectangle formation, and that rectangle formation says, yeah, you can give back towards the 1320 area from the 14, if it can touch just over 14, if it can get to 1407 to 1417, today's high was 14 10. So it's just 7 cents away, and says the 9-period moving average of 13.76 is going to be important. But the pattern itself doesn't say that it's going to break down and fail. It says that it's more likely to go into a rectangle sideways move as a rotational market takes over. And you know that if I want to use the bonds here as a good example, bonds have had tremendous resistance in the 146 area. They've gone to peak A, B. Wait a minute. Yeah. Let me just double check. 30 seconds. I could even call this a phantom B. I don't often do that, but I'm going to do that just for argument's sake. C. I could even say that technically bonds have made a little bit of a short-term top here and could be pulling back, but they've got a lot of support in the 141 and 10-30 seconds area. So I'm going to be watching this closely. If bonds close underneath 141 in the next 2 sessions, then this market is going to break out and go even higher. So I've not got a sell signal in place at all yet. I'm just getting ready that I think there could be a 3 to 5 or maybe a 5 to 7 day consolidation. So your question specifically is
for CEL, Charles Edward Larry. It seems to be really in a downtrend, but it looks like it might be bottoming, and I can't tell. But you've got all these techniques that maybe you have a better idea of whether it's just crashing, or just going down, or if it's bottoming and might be a good deal for my IRA because it's got a huge dividend.
For the IRA. Okay, that's 2 separate questions here. But you know what I'm going to do? I want to talk chart patterns. I'm going to talk about your CEL, which is Cellcom Israel Limited. It's trading at $16. The pattern that you're looking at in the weekly chart, I don't know if anybody will recognize this, but I'm going to put it up here, and I'm not going to say what it is. Hopefully that you won't be able to see it on the, probably you will on the TFNN. But if you're looking at this, folks, tell me if it doesn't look very similar to the chart pattern you're looking at here. And what is this? This is the price of UNG, which is the United States Natural Gas Fund. It failed to close above the 9-period exponential moving average. It's just been an unbelievable, for anyone who's been short this particular fund, it's just been, at any day, you could have you could have bought Apple at any point, even if it was at a high, and you'd still be a winner. Here, you could have been shorting the UNG. Now, let's go. And the reason why I wanted to do it is I want to talk chart patterns. So when you're talking CEL, here's something that I'm looking at. When I go to the monthly chart, there's a left side, right side price time match. And I choose this one a little differently because I go to a particular candle that for me is very important. And it goes from the 17.79 IPO second month out of March of 07, where it went to 16.41. 16.41. Not 17.79. 16.41. And then what did it do? 16.41. It rallied all the way to a leg D. What do I say in a leg D? This is a monthly chart. That's where you got to be careful. When at 37.05 in July of 08, it plunges down to where it goes to 19.71, round number high of 23, goes to 19.71, rallies back but fails to make a new high, makes this doji candle on the March of 2010 at 33.20, pulls back to the 200-period moving average. That's a beautiful mauve line right there if you're looking at the charts. Rallies and makes a lower high, an A- at 35.35, and then plunges down. But in this particular arch formation, it's actually a double arch formation, but let's just call it an arch formation. There's a technique that I use, and that technique says if it closes below the left side low, if it goes below the left side low but closes above it, that's good, it can bounce. But if it goes and closes below the left side low, and in this case, in January, if it closes below 16.41, that says you have to wait for a whole new bunch of buy signals in the shorter term, that's the daily and weekly chart, to get a real good buy signal. We're looking at CEL as the symbol, Cellcom Israel. But now let's go to the weekly chart. The weekly chart has that UNG pattern where it only once did it close above the 9 EMA, but it's starting to form a little bit of a base. And I would say to you, as an IRA potential, I would have to wait for a whole bunch of information, even if you gave up 2 or 3 points on the upside, it would not be a big deal if it was going to rally, because if it rallies, it's going to go to the 200-period moving average of 26 in the weekly chart at some point, if at some point it can take out 2283. So those are the upsides. So this is what I would say to you. I don't think you need to rush into a stock like this, but on a shorter-term basis, it is attempting to make a bottom, and a bottom of substance at this particular point from the chart pattern that I'm looking at. I have no idea about the fundamentals, but I'm going to also say to you that if you were to just, it's at $16, if you would like to nibble on 3 shares, I don't care if the shares cost more than the cost of the actual, the cost of the stock, and someone's just put in 20% yield on CEF, this is CEF, not CEL. I get very suspicious. Someone emailed me the other day on a stock that was giving 65, I think it was, % dividend. I looked at the price and it was at $1.20. I said, don't touch it. Don't even think about it. There's no way. They're not even making money. This might be a little different. So I'm going to say to you, do your homework, do some studying, buy 1 share maybe, and the only thing that I say about the 1 share is that it's going to give you a lot of information and you'll be following it very differently than if you had no shares. I personally would say I would wait for the weekly chart to close above the 9-period exponential moving average of 16.94. Let's call it 17.30. If the weekly chart ever closes above 17.30, I'd start looking at it. But do your homework, find out how much money they're making, why they're paying that kind of a dividend. There might be something in it because it's a foreign stock, but I would only nibble on 1 share or 2 shares to get a real feel for how it holds the low of $15.41 that was made in the 6th of January. So that's the only way I would look at it, especially since you say looking out longer term. I don't think this is a longer term. This is actually a trading stock. If it does what I'm saying, it could have a nice reflexive bounce towards 17.21, and then if it can take that out, you can go to $18, maybe $18.20. But that's the only way I'd play it. Hope that helps you.
Thank you. It does. I should be very cautious.
Yes, I think you should be very cautious. So, thank you very much for calling. Whoops, is that a break? Yep, we got a break coming up. Whoa, time's flying. And I still wanted to go through some of the other stuff, cotton and other things, and we've got Lou on the line. We'll be back with Lou straight after this, and I will also show you cotton, which is actually starting to look quite good.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
I'm very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
Yeah, I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Hi, everyone. Basil Chapman. We're going to go straight to Lou in Mass. Hi, Lou. How are you? Lou, you there?
Hello?
Hi, how are you? You'd like to look at what?
I'd like to look at the SPYs. Actually, I wanted to short with BGZ.
Okay, this is what I'm looking at, folks. I'm going to use the SPY. BGZ is 3 times bear fund of the big caps, I believe. So the SPY would be the root. It's the Spider S&P trading vehicle. Is the deposit receipts is 131.37. I was anticipating today that we would see some kind of a doji. I wonder if we're going to get that in my Dow chart. Let me just go there. The Dow chart, no, not yet a doji. We have to close. If it slides a little bit more, we get our doji. So this is what I'd be looking at. Out of the very best chance to go short, where would I go short? I would have to say to you that we are in the area now where I don't have a signal. I need to wait. In fact, I think the way I'm looking at it is that my S&P index itself, we're looking at the S&P index, has either recycled up to let me just double check. 11 is the high. Oh, no, this is C. Yeah, my 120-minute chart is actually recycled higher, so I'm anticipating we could still have one more bounce. I would, because you're going 3 times, I would have to say to you, I don't have a signal. I can't give you the signal right now. I can't say to you, this is the exact moment to short, because as I see it right now, I need to either wait for the close. If there's a failure, maybe I'll get the signal. If there's a pullback and then another higher high in my 120-minute chart, I probably will get that signal. So I'm going to say to you, because it's the 3 times, if you were just going, in other words, if you were talking about the Dow Diamonds, I would say the DOG at 100%. Short is a much better vehicle. So the SPYs, the SH, I believe it is, the SH, let me just double check. I haven't traded it for a long time. Yeah, the SH is just 1 times. I would say to you, at the end of the day, if we are closing near the highs, then you might want to take a very small position, something like the SH. I would not go into the BGZ, not at this particular time because I don't have the signal, but I'm very close to some kind of a pullback. Now, I know Larry has his cycle date of coming Sunday night, Monday. I cannot get cycle dates until I get my sell signal. It could coincide exactly with that day. If there's a pullback tomorrow and I get another leg up in the S&P, I will then get a new leg D up, and then I'm ready. So if you're asking me, I'm holding off going short for my opening call subscribers. I want to get my signal. I want to be assured of it. So my answer to you is, if you wanted to start a small position, maybe you could go small position in the BGZ. I would probably say the SH is probably the vehicle because it gives you a little more flexibility, and then you can add another position by Monday or Tuesday. But I'm still looking at this and saying the 129.41 area is the 9-period exponential moving average. We are far away from that, so that's where you could pull back to. It's no big deal because we were there just yesterday. We were even lower. So I don't have the signal, and all I'm saying to you is be careful. If you want to go short at the end of the day, you can, but be prepared that you might have to add to that short Monday or even Tuesday based on my work. I don't have the signal. I might get it by the end of the day tomorrow, but I just don't have a signal. I'm very close, but I don't have the signal. So I hope I can help you now. Now, if you want to know where I would be looking at, if I drew an up channel, the up channel would take us to, we're kind of there. Yeah, no, I think that, I didn't even get a chance to do the cotton and everything. Yeah, there we are. This is where I'd be looking at. Between 130.190 and 132.50 is about the area that we might get a reversal. So I hope that helps you.
Thank you, Basil.
Thank you very much, and thanks for being here, folks. I'm sitting in for Larry Pesavento. I'll be back with my show tomorrow at 11 o'clock for the Tiger Technicians Hour. And my service is the opening call. And you know what? I'm going off to play tennis for an hour. I'll be back tomorrow morning.